good afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain. With me is Aisha Faridi. It's the day of the monthly expiry and it looks like it's going to happen on the back foot. At least 20,000 has been held very comfortably throughout the trading session, but maybe not that 20,100 mark for as of now. Having said that, it's the biggest monthly gain that we are seeing in almost a year on the Nifty. This time around, it's up over 5% in this month itself, and the Nifty small cap index has seen the biggest monthly gain that we have in over 2 years. So that's the kind of solid run that we have seen in the month of November itself. It's been a sparkling Diwali to say the least, but of course now we are watching out for that Santa Claus rally. It was a bumper listing today for Tata Tech. 160% higher to begin with. Of course, it went up to 180% levels and still holding on to somewhere close to that mark. So 1300 for now on Tata Tech, and Gandhar Oil as well completely got overshadowed by the kind of listing Tata Tech got, but nonetheless a solid listing nonetheless. 80% higher for that one. You have real estate names bouncing back today. So Prestige is sitting at all-time high levels. Brigade Enterprises is doing well. And then you have Lodha Constructions too, holding up with a gain of 4%. And names like Trent, Gale, Metro, they're all at all-time high levels. Of course, specific news flow on the likes of Metro brands, but a very vibrant market at hand for the broader markets.
Extremely, and you can't take your eyes off from the 3 new debutants, and even Federal Bank has now been added to that list, because you've got A, of course, Tata Technologies. What a fabulous debut it has been. In fact, if you were to just map not Federal Bank, the new listing is what I'm talking about, Fed Bank, that will just come up for you on your screens. But Tata Technologies, not just it's been a great debut, but even if you were to stack up the listing day gains, and I'm just talking about the first debut pop or the listing pop, it's been the best in the last 1 year and in the last 5 years as well. So clearly that's something that the street is extremely excited about. It's built on to the gains of that opening move as well. Fed Bank, as you saw on your screen, started off of course in the red, and from there has seen a good amount of pickup. And even Gandhar Oil, that's holding up very smartly indeed. 161% gain coming in at Tata Tech. Gandhar Oil, $135 up in the green, and similar is the price action for Fed Bank financials as well. Foot Locker, that's going to be stepping up its shoes into India, and it's a tie with Nykaa as well as Metro brands that they're looking at, and both those stocks have started off well in the green and continue to hold on to their gains. This New India Assurance as well, 20 to 25% price hike in the second quarter is what they're looking at in the retail health products, and that stock has been going from strength to strength for a second consecutive day. That's been holding out very smartly indeed in trade. Let's welcome on board then our chartists, our fundamental expert Sandeep Sabharwal. Lots to talk about. You've got expiry, you've of course got the exit polls which are going to trickle in this evening itself, and the market too. But Kunal, first a word on the index. It's tempered down after hitting that 20,100 level yesterday. But that's okay, right?
Yeah, that's okay. I think it's a pause for the indices now that we are heading into that election event, and of course the exit poll outcome for the stocks for the elections. I think it's going to be a bit range bound. It's a slight bit more volatile than what we've seen over the last couple of days. But I think till the time we are still holding on to those key support levels, as well as not filling the gaps which has been created on the indices, both in the Nifty and the Bank Nifty over the last few days. I think that would be taken as a positive sign for the index. We're still holding on to that 20,100 mark broadly for the index on the spot levels, and I think that's a encouraging sign that the index, even after that slight bit of increase in volatility, is still holding on to those key pivot points or support levels.
Okay, holding on to those key pivot points and levels, that's the important thing to track. But Nuresh, what about the Nifty Bank taking a bit of a reversal today? A damn squib?
So, not a great follow-up from yesterday's momentum, but overall, the trend still remains okay. We are not seeing a major correction as such. Holding on to the level, so till the time we hold above 44,200, 300 levels, the trend remains positive. So, expecting an eventual follow-up in all the heavyweights on the banking space. The leader continues to be Axis Bank. The next could be a surprise move in ICICI Bank, which could, say, bounce back from this 920, 930 mark. And then finally, HDFC Bank has started showing the first signs of taking some momentum, at least not drifting anymore. It has started drifting upwards.
Okay, point taken. Sandeep Savarwal also joins us on the show. And Sandeep, I have to begin by asking you about this Tata Tech IPO. Okay, we don't have him yet, but nonetheless, we'll get him soon and get his views on Tata Tech IPO because that's the biggest talking point. And we did speak with the management actually. And VinFast is one of those issues that has been brought up. They said that they are expecting a minor impact in terms of the revenue in near term, but the long-term story remains intact. Listen into what they had to tell us.
We believe that we are in a great sector. We believe that the global ER&D market will continue to grow in double-digit terms. We expect to meet or exceed the growth rates of the overall market, given our market position and given the differentiated value proposition that we represent. So we're very bullish about the future. We're very bullish about the overall market, and we're certainly bullish about the contribution that we expect Indian-based ER&D companies to make to the global manufacturing sector. Onshore, offshore ratios today are about 50-50 in terms of revenue. We fully expect to be able to improve that to about 65 to 70% of our revenues coming from offshore services. And we think that that will have an incremental improvement on margins going forward.
Okay, that's Tata Technologies. But interesting as it may be, our research team, of course, has culled out how the performance of the recent IPOs has been. And while we are talking about all the hunky-dory gains that have been made in the recent IPOs, it's also important to mention how some of the IPOs have performed from the listing day, and they all not have done well. While they may be a listing pop, but cases in point being an Indigo Paints, the percentage change from the listing day to now, it's down about almost 52%. Similar can be said about a Burger King, about a Sigachi, a Latent View, even some of the very fancied names like a Paras Defense. From the listing day, it's pretty much flattened out, and after the recent move that you're seeing in some of the defense-related names, only it's made up and, showing you a 43% gain. But that's not really been the case with all the IPOs. There are many like a Tattva Chintan as well, which are down about 35% from their issue price, from their listing day moves, that is, and similar can be said about a GR Infra projects as well. But in fact, on that subject, considering it's the hot IPO market right now, let me also welcome on board Vamakshi, and she's been culling out all the data on how some of the recent IPOs have performed and how Tata Technologies, given its listing pop, continues to top the charts for a quantum of 1 year as well as 5. Vamakshi?
Well, yes, the primary markets are abuzz in how. In fact, in 2023 itself, 48 new companies listed on exchanges. And it is very important to know that almost 77% of them have managed to close in the green on their listing day. Now, let's also understand what exactly happened with the 3 new listings that took place today, which is for Tata Technologies, Gandhar Oil, as well as Fedbank Financial Services. Now, particularly talking about Tata Technologies, that stock has actually managed to list at a stellar 140% premium to its IPO price. Following shortly behind it is Gandhar Oil, which listed at a 76% premium. While on the other hand, we did see a very somber, muted listing from Fedbank Financial Services, which actually opened at a discount of 1.5%. Now, let's take a step back and understand how IPOs in 2023 have actually managed to perform specifically on the listing day. Now we have Tata Tech, which is in focus because only at its listing price, which came in at a premium of almost 140%, it is on track to be the best performing IPO on the listing day in 2023, just accounting for the listing price gain. Apart from that, when we look at other counters that made it to this list, it includes Idea, Forge, Utkarsh Small Finance Bank, and keep in mind that Irita, this counter also listed yesterday, and in fact the counter managed to post a listing day gain of almost 88%. Moreover, Tata Technologies is in fact among the top 5 IPOs that have been performing really well on the listing day gain in the last 5 years. In fact, Sigachi Industries managed to gain almost 270% on the listing day. Pars Defense, Latent View are just some of the other counters that also managed to make it to that list. But Tata Tech is slated Overtake Latent View in this regard. In fact, Latent View had a listing day gain of almost 148%, and Tata Tech is on track to overtake Latent View. So all in all, definitely it has been a stellar day for most IPOs that have been listed in 2023. But today particularly, we will be keeping an eye out on the new listed players, that is Tata Technologies, Gandhar Oil, as well as Fedbank Financial Services.
Thanks, Makshi, for that. Important flashes at the bottom of your screen. The Defence Acquisition Council has decided to make further upgradations when it comes to our fleet, and that's why they have approved almost 1.5 lakh crore worth of defence equipment from domestic companies. So another leg up coming in for the defence sector. They've approved the purchase of 97 Tejas fighter jets and the procurement of 156 helicopters as well. And there is a plan to actually upgrade, Sukhoi 30 MKs as well. So we are watching out for all of this information as far as defence sector is concerned. But shifting focus back to the IPO market, Sandeep, your view on Tata Tech, the kind of frenzy that we had seen in terms of subscription, the kind of over exuberance that we saw at the time of listing, what would be your recommendation to investors?
Yeah, Tata Technologies came at a price earning ratio of around 30. Now with a 150, I don't know what's the price now, how much gain it's trading at. So I think it's trading at like your portfolio 77p. So most large cap technology companies trade near 25 to 30 times. Most specialized IT, some of the specialized ones trade at more near 30 times. It's clearly overvalued at this price, and I think people should not get taken up by the irrational exuberance we are seeing today.
There was a big pop in IREDA as well, Sandeep, yesterday. Of course, a completely different sector altogether, with peers the likes of a PFC, REC, and how sought after they are. Just wanted to understand, for those who've missed out on the IPO allocation and very tempted looking at the first day gains, wanting to buy into these companies, what's your message out to them?
My message is that similar companies which have been listed and around for many years trade at much lower valuations. So you look at opportunities outside this space, because this is complete frenzy what is happening, and it's FOMO by people who didn't get allocations or who think that and there's a set of investors in the market who play on such illiquid counters because the liquidity is limited, holding patterns are limited, and I don't think retail investors should get swayed by these kind of short-term moves. I would think that if many of these, if we look at the valuation that these companies are trading, then the Nifty should actually be trading at 30,000.
Point taken. Don't get swayed by these short-term moves. But hold that thought. Actually, Sandeep, I want your take regarding defence sector as well, because seems like there's fresh news flow of the approvals coming in from Defence Acquisition Council. And my colleague Prakash, who's been tracking this story very closely, joining us with the latest on this one. Prakash?
Yes, an important development coming in. We are learning that the Defence Acquisition Council has given its approval of around rupees 1.5 lakh crore defence equipment procurement from domestic companies. So it's a very important development coming in. Also, we are also given to understand that Defence Acquisition Council has approved the purchase of 97 Tejas fighter jets from domestic companies. Along with that, procurement of 156% helicopters have also been cleared by the DSE. In addition to that, proposal to approve C-30 MKIs has also been approved by the DSE. Along with that, sources are also saying that there was a separate proposal to manufacture aircraft with the cost of around rupees 40,000 crore, which has also been approved by the DSE. So it's an very important development coming, especially in the context of becoming self-reliant in defense sector. Along with that, the government is also moving ahead with the objective to become export hub as far as defense equipment are concerned. So it's an important development coming in. Back to you.
Absolutely an important development, and take a look at the stock of Hindustan Aeronautics as well. It was doing well as it is, but after this news flow that my colleague has brought us exclusively, that stock has actually jumped in 4% further. Sandeep, your view on the defense stocks, and is there merit in buying some of these names for, let's say, 3 to 5 year view?
Yeah, so I think the first thing is that if you have them, there's no reason for you to sell them. So that's one thing which is very clear, that if you have got into these stocks at reasonable valuation, then there's no reason for you to sell. So don't be in a hurry to sell, just looking at the stock price movement. The second part is when to buy them. So I think there are periods in between, markets give jerky corrections, there are corrections. So use those times to buy, because the news flow, both in terms of what's happening for acquisitions on the aircraft front, on general defense, as well as on the ships, frigates, etc. I think the magnitude of these orders is so huge that it gives visibility of growth for these companies for several years.
Yeah, fair point. In case you're holding on to the defense names, continue holding them. But Sandeep, stay with us. Lots more to talk about. We're going to take a very quick break, but here's a programming note. ET Now and ET Now Swadesh are in line with helping Indians rise with India. We partnered with Sundaram Mutual to launch Nivesh Day, which is a groundbreaking campaign which is going to help viewers build their personal finance portfolios through regular and disciplined investing. Nivesh Day is being celebrated on the 5th of every month. So join us on both the channels as we tell you how you can build your financial future with an SIP in mutual funds. Back with closing trades right here in ET Now. Let's just take stock of what the market is settling in at. It is definitely consolidating today, irrespective of those big pops in the 3 new listings, or for that matter, India Cements, which has jumped up about 8%, GAIL, which is holding higher by 5.5%, Trent up 3.5%. BHCL continues its dizzying move. Yesterday also, I think it was up 6% or so, and today too, it's been adding another 3.5%. Indiabulls Housing also holding up about almost 5% as we speak. In fact, not just India Cement, the entire cement pack is looking very strong. Look at the move on an Ultratech too. That's holding up by about 2.6% as we speak right now. But Sandeep, another big event today, you'll have the exit polls for the state elections trickling in. A market moving event, you think?
No.
Okay, short and simple answer at that. So since it is an emphatic no, let's talk about what is actually moving the market, and that's definitely the cement play. Sandeep, you think it's a long-drawn story, the entire construction infrastructure and their ancillaries, and you think any time is a good time to buy into these names?
Yeah, so I think as we look into 2024, some of the sectors which have done well in this year, I think will continue to do well, which include names like capital goods, infrastructure, auto companies. I think the momentum is still there. And some sectors which should pick up next would be financials, which generally remain subdued this year, at least on the large cap side, and also the cement sector, because in between there were fears that input cost pressures might come back as crude prices rallied, but now they have come back again. So, and demand scenario looks reasonable. The only thing is that supply increases next 2 years will be strong. So I think the demand needs to hold up at current levels. But overall, I think it's a story which should do well.
Point taken as far as the cement sector is concerned, but in the last few minutes there has been a bit of perk up in the market. Let's pull up the intraday chart. We are above the mark of 20,100, so probably preempting that 3 p.m. move as far as monthly expiry is concerned. So in the last 30 minutes from the lows, we have seen quite a bit of recovery as far as the market is concerned. It's M&M, which is high by 2.5%, so that's one of your top contributors at the index level. Bharti Airtel is inching higher, and then cement names, as we pointed out, Ultratech Cement for that matter, is up a good 3%. But talking about the auto sector, Sandeep, tomorrow we'll get the auto sales data and we'll run the expectations as well. Seems like it's going to be a bounce back from the two-wheeler space.
Yeah, so I think data this month is important because the stocks have run up so much. So now the data needs to support the stock price movements, and the communication from both the dealers, FADA, as well as the companies indicates a strong pickup in demand, at least on the two-wheeler side. And also on four-wheelers, tractors were a bit subdued initially, but then later on picked up. So I think this time numbers are very important for short-term price movements of these stocks.
Kunal, your view on the two-wheeler basket, which stocks would you prefer? Because I think you suggested to book profits on Hero today.
Yeah, so I think that was a recommendation which I had given a week back, 3,300, 3,400 mark for Hero Motocorp. So I think at 3,850 odd levels, a good time to book out profits. Eicher Motors, on the other hand, I think is heading towards a breakout. So I think after maybe many weeks of consolidation, 8-10 weeks of consolidation, the stock is showing signs of good recovery as well as a potential breakout for itself. So this completes a possible triangular pattern for Eicher Motors. So that could be another interesting name from the two-wheeler pack from current levels.
Sandeep, have to take stock of Bharti. It's a 4-digit stock now. It's breached that 1,000 mark for the first time. The market cap is almost nearing that 6 lakh crore mark.
Yeah, I think there are 2-3 underappreciated large caps in the market. So Bharti, Airtel, let's say something like Bajaj Auto or M&M. I think these are companies which are doing very well. But then they are relatively underappreciated because their moves don't tend to be very volatile. They are steady performers, steadily they give returns. For a long time they don't perform and then suddenly they start performing. And I think for long-term investors, these are still good stocks.
Kunal, what next on the charts for Bharti, considering it's already made it to the 4-digit gang?
So I think it's been a very slow, consistent movers. I think we've been tracking the stock since 450 odd levels when the stock was absolutely sideways for months on a trot towards a point when the stock had given a breakout above 600, 650 mark. And now the stock is back above that 1,000 level. So it's a good sign that the momentum is continuing for Bharti Airtel. What I do like about the charts is the consistency of the trends for Bharti Airtel. So it tends to move into a different tangent altogether, devoid of how the markets or the overall market trends could play out. So I think in that aspect, I would expect the trends to continue for Bharti Airtel. And even if you look at the last 6 months of price appreciation, we could be looking at another 60 to 80 rupees to be added. So at least another 1,080, 1,100 mark could be a target for Bharti Airtel.
Okay, point taken. Just take a look at SBI Life and HDFC Life as well. These insurance names continue to buzz quite a bit. So both of these stocks are high by 2 to 3%. And the New India Assurance and GIC, there's no stopping both of those stocks up, 60-70% within 5 days itself. In fact, New India Assurance did hold its analyst meeting and the commentary is quite strong. We'll get you the details on that one, but after a very short break. In fact, on that note, we'll thank Sandeep as well for making time and speaking with us. Slipping into a very short break. When we come back, we'll track that 3 p.m. move on account of the monthly expiry.
Okay, back with closing trades right here in ET now. A smidge of a recovery actually, not bad, 0.5% or so from the bottom of the day. We are back at that 20,100 mark on the Nifty futures. Ultratech Cement, M&M, SBI Life, Hero Motocorp and Eicher are the ones which are actually leading the gains. But you've got your GDP print as well, which is due today. So let me welcome on board Indraneel Sengupta from CLSA joining in to talk about what making of the macros right now. Indraneel, hi, great to have you on the show today. Amid concerns around slowing global economy, what is your expectations from the Indian economy in terms of the growth numbers? Is it really that bright spot?
So, India obviously, has the advantage of domestic demand. So, while we will also be affected, the impact on India is typically much less than most other emerging markets. So we are looking at a growth of 7% this evening, 6.4% for the year, and about 6.5% next year. So we've seen that an US slowdown typically affects us by 100 basis points. Need to see how much the severity of that slowdown before we come to further, numbers.
Sure. Indraneel, there are also hopes for a Fed pivot, which have intensified. 10-year yields after hitting a peak of just over 5% in October have slid to 4.25%. Do you believe that Fed is done with the rate hike cycle?
So we do believe that the Fed is done. Maybe it'll be on hold for a while to see that inflation, retraces back to the 2% target. Maybe second half of next year. So we do believe that the Fed is done.
About the Fed, opinion in terms of whether they are done raising rates or not. But what about back home in India? Inflation seems to have moderated. Would it lead you to believe that RBI might too reverse its rate hiking cycle?
So we actually have a contrarian call for an RBI rate cut in December. Inflation is no longer a concern. If inflation is 4.9, core is 3.8, that is no case to keep the repo rate at 6.5%. So I'm sure that, as the RBI gains confidence that the Fed is done, they will start to cut rates.
Okay, so perhaps India would be leading as far as the rate cut cycle is concerned. But Indranil, what about the latest high-frequency indicators that we have gotten? What do you see in terms of the urban versus rural consumption trends that we are witnessing?
So rural strain is very clear in most of these indicators. We ourselves estimate that farmer income during the Kharif crop will contract by 3.4%. Versus an increase of, I think, around 8-9% last year. You can also see the, enrollments under Narega rising. So clearly, rural India is under stress. You can also see the government taking various measures. Urban unemployment is, I think, broadly in line with trend at this point in time. So I don't think there is so much of an issue with urban consumption. It is rural consumption that is stressed at this point in time.
Sure. So in the current context, what's your outlook on the Indian markets? I mean, is India a safe haven in the current global volatility?
In a way, yes. But again, our valuations are also, challenging. And we are seeing some kind of a time correction. If you look at the year-on-year increase in the Nifty, it is about, I think, 8%. And going forward, we see a fairly range-bound market at this point in time. My strategy sees a fairly range-bound market at this point in time.
Right. So what themes are you recommending right now? Sectors, something that you're going to avoid and something you feel that is fairly priced right now?
So I think to cut a long story short, we are bullish on financials and bearish on consumption.
Okay, and finally, before I let you go back to your CLSA India forum, which has seen quite a bit of interest, Indranil, your take on the long-term trajectory for the Indian economy. What are you hearing from the participants in the conference as well?
Yeah, so we think that India will touch the size, Japan in size by 2027, will grow to about 45 trillion by 2052. And almost 90 trillion till by 2072. Net from 2027, India will be the third largest in the economy in the world in the foreseeable future, after China and the US.
Point taken, Indranil. On that note, we'll let you go. Appreciate you making time and speaking with us. A quick look at the markets. In terms of the 3 p.m. move, yes, there's a bit of a recovery that we are witnessing. Sensex as well is up almost 0.5% from the lowest point of the trading session. On the losing side, Indian Bank has suddenly taken a bit of a dip, so 5% lower on that one. Solar Industries is the other one that is down in the trading session. New India Assurance is actually up 10%. My colleague Anurag will just join us shortly to talk to us the takeaways of that meeting that happened yesterday evening as well, and then GE Shipping, Sonata Software, some of the other big buzzes as well. But talking about the fundamentals of the market, we have Ashi Anand joining us to talk to us about just that. Ashi, let's begin by asking these latest IPOs that we have seen. Have you tracked Tata Technologies?
Oh, yes, we definitely have. And it's clearly been one of the most attractively subscribed IPOs in the market we've ever seen. So clearly a lot of interest in that particular company.
Okay, sorry, Ashi, please go ahead with your answer.
Yeah, sure. No. So Tata Technologies clearly is a very interesting tech company. Now, the slight problem is, I think, post-listing, you're going to see a trade at kind of premium valuations. The overall scope for kind of growth, given a slowing global economy, is a bit impacted. So while Tata Technologies clearly is a very attractive company, I think as a stock, we just need to see where it settles post-listing, and we can kind of take a call from it post there.
Taken. So that's the Tata Tech IPO view coming in. But for the markets itself, Nuresh, your sense as far as the expiry move is concerned, anything that catches your attention in the last 10-20 minutes?
So majorly, we are just seeing volumes happen in names like IndusInd Bank because of the MSCI reject. But one sectoral change which we are seeing is oil and gas names. So we earlier saw OMCs do well, and now we are seeing a breakout happen in the GAIL, which has hit a new all-time high. You have ONGC, which is getting closer to the recent 52-week highs. And then you have Petronet LNG, which is making a basing out formation. And then you have Container Corporation, which is more, again, another PSE, which is breaking out. So overall, oil and gas, specifically ONGC, GAIL, look very promising at current levels.
Okay, that's the take coming in. Actually, the other segment of the market which has been extremely buoyant has also been the entire PSU pack, right? And I'm talking ex-banks. The rally over there has really been unabated. I mean, even today you can point out GAIL, BPCL, all these stocks are flying and given very solid year-to-date returns too. Wanted to understand whether this is one theme you think is going to continue to do well as well in the times to come.
So ex-PSU banks, and I think there is slightly greater comfort amongst the PSU bank space, especially the higher quality PSU banks like SBI, Bob. I think those are certain spaces we are more comfortable with. But once you move out of PSU banks, another space we kind of like are some of the defense names, but some because some of the PSU defense counters can have very volatile order books. Certain segments of PSU capital goods also seem interesting. Gas is another space which is relatively interesting longer term, but some of these, right? If you're looking at companies like BPCL, I don't think they've really transitioned yet completely from the thermal dependence that they used to have historically. A lot of what you're seeing in terms of refineries and oil and gas are not really sure in terms of the longer term value and dynamics in that particular space. So within PSU, I don't think you can really look at PSU as a whole. I know markets at some point in time, at this point in time, are kind of looking at it as a basket, but I think the underlying dynamics of these companies can be quite different. And it is really important to kind of be careful in terms of the companies that you're going into. As long as the longer term outlook in terms of growth of some of these segments are fine, it's okay. But some of these are really not the best run companies. So it's not a space that we are very actively participating in.
Point. But back to that New India Assurance analyst meet that I was talking about, the stock has had a solid run over the last week or 10 days itself. In fact, if you can pull up the chart of New India Assurance for the last 10 days, that'll tell you the stock is at what, 60-70% already. But nonetheless, let's listen in what Anurag has to say or what the key takeaways were from the analyst meet.
In last 5 days, New India has shown a superb surge of around 44-45%. And in analyst meet, New India management has cleared few more points, and in the analyst meet, they have said that they have taken a retail health product hike by 20-25% in retail health insurance products, and this is the first hike after 6 years. So last hike was in year 2017, and they have a cycle of 3 years in taking in retail product, hike in retail product, but in 2020 there was no hike due to the COVID. So after 6 years, they have taken a hike of 20-25% in retail health insurance product. And as New India has a overall of their overall business, they have a 25% of business coming through the health insurance portfolio. But now management has also said that now onwards they will have a gradual premium hike every year, since the policyholder gets a big pinch of 20-25% hike. So now they have decided that every year they will be having the premium hike as per their experience, as per their medical inflation. Apart from that, they have mentioned that their solvency has come down to 1.70% from 1.77%. One more initiative about which the management is confident about the 100% cashless and National Health Exchange. So according to management, these initiatives would be helpful for the company, because fraud detection would be able to happen from 100% cashless. And company, I have also mentioned that the fundamentals of company are very robust, and they have New India is among the very few insurers who has launched surety bond product also for the infrastructure financing. On the cost front, on the operational cost front, rationalization of operational office has helped the company. Combined ratio in the government sponsor scheme, they have seeing some pressure there, but they are working to take the corrective measure in that front also. In Q2, New India has suffered losses due to some catastrophic events, floods. So that has cleared by the management. And overall, company is focusing to increase their the company is focusing, and the overall retail to corporate business ratio is also 60 to 40%, which has been mentioned by the management. So company from 1st of April, the new expenses of management rules has been established. So they are getting new businesses, and they're giving more incentive to the agents to acquire the new business.
Right, okay, we'll leave it at that. New India Assurance, of course, has been the one which has been quite the mover of late. In fact, the other insurance plays as well, like Anisha was just flagging off, most of these stocks are holding out very well. Ashi, you wouldn't have any interest in the insurance space, would you?
No, we actually very much do. So we have a strategy that we call concentrated micro trends, where we're really focusing on those parts of the market where we're seeing value creation happening. So just a micro trend is within a larger sectoral or a larger thematic trend. What are many kind of trends that you're witnessing? So say, for example, in BFSI, we see these banking franchises as being one micro trend, asset quality normalization being another micro trend. We are very actively looking at the capital markets or the financialization of savings microtrend, where you are seeing a shift in savings profile of the Indian saver away from traditional fixed deposit, physical real estate and gold towards financial securities. Now, this can benefit a broker, a demat company, a mutual fund, or insurance. I think this entire space looks very attractive over the coming decade as kind of India as an economy grows, as discretionary consumption increases, as incomes move up. You are going to see a greater and greater shift towards kind of financial securities. Now, within this kind of insurance, does clearly look quite attractive, and across kind of insurance segments, be it life, auto, health, etc., penetration rates in India are substantially lower than what you are seeing globally. I think this is especially true in life and in health. And it really gives a very large legroom for growth. You have kind of space for growth just in terms of market share, in terms of the market overall increasing in size, but there's also a larger value migration at some level that you're seeing away from PSUs towards private sector companies here, which is also helping boost growth rates. So it is definitely a space we are looking at and that we do like.
Pocket which is doing extremely well is of course real estate and building materials. For real estate, Prestige, Lodha, Brigade, they're up anywhere between 5 to 10%. That index itself has been hitting record high day after day. And the other space from is building material and cement space. So Ultratech Cement is higher by 3%. Look at that stellar move on India Cement, 7 to 8% higher. Kunal, your view on these cement names as well as the real estate pack, what looks attractive?
So from the cement pack, Ultratech Cement is something which we highlighted I think a few days back also, that it's one of the larger cap names, formidable ones, as well as the one which is more consistent. India Cement is a bit high beta. Now when you try and do a relative comparison, for example, Ultratech Cement is back at its new highs, breaking past about the 8,850 mark approximately, which was the previous high for the stock. As compared to that, India Cement is still off from its previous highs in the month of September, October for itself. So that means that the stock, even though it's showing good movement today, is still a bit of an underperformer. So would go with Ultratech Cement from the cement pack. From the real estate pack, there are two stocks which have been consistently bullish on and have been recommending a buy, and that's DLF as well as Anant Raj. I strongly believe that both these stocks are still looking very attractive even at current levels. So I think Anant Raj has now moved up to 265 to 70 approximately, and DLF is already about the 600 plus mark. So both these stocks are my top favorites from the real estate.
In fact, since we are talking about cement, we did have a discussion with Rakesh Arora as well as the management of Birla Corp today, and both were of the view that the margins are expected to expand in the coming quarter. Listen in to what they had to tell us.
Yeah, I think there's an improvement QOQ both on realization and costs have kind of stabilized QOQ. So I don't really see too much of margin pressure. Actually, margin should expand in Q3 as compared to Q2. Demand obviously has taken a knock in November because of festive season, and also North India normally, during winter sees some curbs on, agglomerate mining, etc. So, and even construction activity takes a little bit of backseat. So demand is slightly weak, but it is better QOQ. And Q4, I think, would be the best of the last few quarters that we have seen.
Ashi, wanted to get your sense in. I mean, realty is pegged to be a decadal story, right? Along with, of course, infrastructure, especially ahead of the elections. What's the best way now after the rally, which has already played out, to cash in on this surge?
I'm sorry, did you ask me the question?
Yes, Ashi, to you.
Hi, sorry, I didn't hear my name. Yeah, so I think we're still relatively in early stages of this move. What you have, it's important to understand that real estate, and I have indicated this earlier, is a kind of, you had 2010 to 2020 was a lost decade. You're really seeing a lot of kind of pent up demand. Affordability has improved. The demand or the desire to own a home is actually only just increased post-COVID. I think you're seeing early stages of the cycle. You're still having inventory being cleared out. This real estate trend that you're seeing, especially in residential, is something which, according to us, is still a multi-year story, and you're still early stages of that cycle. Infrastructure, you're really seeing a government which is very clearly intent in terms of improving the infrastructure in India across roads, ports, etc. Now, all of this is all very positive for kind of cement demand. Another very important segment is actually affordable housing. We may not see these numbers in listed peers, but there is in tier 2, tier 3 towns, there is a lot of building happening in terms of single homes, etc., which is a big component of kind of cement demand. So I think the overall outlook for a lot of these spaces, real estate, cement, manufacturing, all of this is looking quite kind of rosy. Stocks have moved up. I think they are reflecting some of this positivity. But given the fact that it is a multi-year cycle, which is possibly just the first couple of years into, we probably see more upsides from here.
So that's the take coming in on the real estate sector, but just wanted to highlight that there was that MSCI rebalancing also which was expected today, and on account of that some of these stocks were expected to see heavy volumes. Macrotech is one such name that was expected to see inflow of almost $170 million, so that stock should come up. The other stocks that were likely to see some sort of inflow was APL Apollo, Tata Communications, Tata Motor DVR was expected to see $170 million worth of inflows as well. And then in the small cap index, some outflows were expected from the likes of Thermax, Linde India, Dalmia Bharat, Tarsons. So just keeping some of these stocks on the radar on account of that volume push that was expected at 3 p.m. today on account of the MSCI rebalancing. But it's the day of the expiry, so what should you do in terms of the positions for going forward as well? Nuresh, what would be the BTSC trade?
So that would be a buy on GAIL India, which has hit a new all-time high. A good clean breakout here, expecting a target price of 138, stop loss at 130. Second is a buy on Sun Pharma, which has hit a 8-9-year high today, stop loss at 1205, target price of 1260.
What about you, Kunal? What are the BTSC trades and what's the view at the index level?
So Dixon is the stock which I would suggest is a buy in terms of the BTST trade. Targets of 6,000, stop loss at 5,400. And second would be a buy on Ipca Labs. That stock is also showing a consistent breakout. So targets of 1166, stop loss at 1100. And in terms of closing trade, Poonawalla FinCorp is something which I would still continue to be bullish on. Recommend this buy in the morning. I think even at current levels of 400, 405 plus looks very attractive.
Okay, those are some of the closing ideas coming in. Just mapping some of the buzzers in trade. While for the index, definitely we've done quite okay after what looked like a lukewarm kind of start. Cement is, of course, the story today. Ultratech, Indus Cement, both those stocks holding out very well. Muthoot Finance has been clocking very good gains, and today is no different. In fact, the spike on Muthoot Finance has just come in the last 1 hour or so. If we can just bring up the intraday graph, there you go. Quite a big spike coming in, almost a 5% gain on that stock. Delta Corp has surged about 4.5%. Again, a late hour surge on that stock too. Indiabulls Housing, similar has been the price action. The move, I think, just come in the last 2 hours or so. And GAIL, of course, has been a more steady shift for the better part of today's trading session, now closing in with a 5% gain. The other stock which is holding out very well and smartly has been Trent. If we can just bring up the intraday graph, because there too you are seeing gains of about 3 to 4%. That's what the stock is clocking. And actually, for some of these stocks, I think the rationale of what the PE looks like or, what multiple is a fair multiple does not really hold true. And case in point being Trent.
So I'm actually not a big buy into that. It's not that PE doesn't hold true. It is today's PE may not be reflective of the value of that particular company. So if you look at Trent as a Trent is a good example, right? They've just been brilliant in terms of the execution on the retail space. Zudio as a format has also been doing extremely well for them. What happens is for certain kind of companies, especially when you are growing, you're setting up new stores, those stores will be loss-making initially. So growth is costing in terms of near-term profits. And if you're just looking at today's profits and trying to give a multiple on that, the faster you are growing, the larger the negative impact of that initial near-term growth. And that kind of inflates the P, making it look very high. So it's not that Ps are not relevant. If you are looking at some of these companies which are growing rapidly, which have high near-term kind of investments which are associated with them, you need to make adjustments to these to understand some kind of true intrinsic PE, understanding earnings a few years down the line and kind of valuing it based on that. So I think valuations and multiples are always important. I'm not of the view that a great company can at any kind of value, right? There always has to be a combination between a balance between growth, quality, and value. It's just that today's price earnings, right, may not be really reflective. And I think this holds true absolutely in our digital portfolio, right? These companies don't even make profits, yet we are looking at profits down the road and being able to value that. But you still always do have to look at valuation multiples.
Okay, interesting there. Ashi, we'll let you go on that note. Thank you so much for making time and speaking with us. But just wrapping up the day's trading action, and it's been a very good expiry for the bulls. Over 5% gains coming in for the Nifty. And if you look at the individual sectors, it's real estate pack, and we should pull up the chart of the Nifty Realty Index and maybe pull up a 1-month chart, and that will tell you that that index is up a solid 18 to 20% in the month gone by. Brigade Enterprises is up 32% in the month gone by. Phoenix Limited has gained over 30%. Ditto can be said for Prestige and Sobha as well. It was a very good month for pharma sector as well. Alchem was up on 28%. You had Granules, Aurobindo Pharma. These were some of the other big buzzers from the pharma sector. Even autos wasn't far behind. Hero Motocorp was one of the top gainers from that index because that was one of the underperformers of earlier months. So Hero Motocorp was up almost 20-25%. Eicher Motors had a solid run this series as well, almost a 20% gain coming in. In fact, all the sectors managed to end in the green for the series gone by. PSU banking space was underperforming a bit, but not by a whole lot. You had names like Bank of India, PNB that managed to gain anywhere between 8 to 10% for the month gone by. So it was a solid performance coming in for the bulls, at least in the month gone by. And even if you look at the individual names, Aisha, you had New India Assurance, which managed a 80% gain. BHL is up 40%. And then, of course, a lot of other names that deserve mention for the month of November.
Yeah, indeed. They're holding out quite well. And of course, the list of the mid-cap movers and small-cap movers continues. Delta Corp, Indiabulls Housing, and some of these have been real underperformers. They too are seeing finally the day in the sun. So they're all holding up very, very smartly as we speak. But that way are pretty much it on this edition of Closing Trades. Winding down at 20,100 plus level.